This is not financial advice. I am recording my thoughts about Intel, whose stock is trading at about $39 with a market cap of about $160 billion. When I look into their revenue for the past 12 months, they made about $75 billion, which represents the price to sales of about 2, which is really good. And the PE is about 6.51, which is great. And they are offering a dividend of about 3.6%, which is also great, right? So this looks like a straight up buy, right? But not so fast. We have to first look at the financials because there should be a reason why it is stuck in the single digits PE, right? The reason for the single digit PE is that Intel's revenue is stuck and their gross margins are falling. For reference, Intel's gross margins are about 50%, whereas their competitors AMD is recording about 60% gross margins and Nvidia is recording more than 65%. So we can clearly see that Intel is losing its pricing power and market share. Intel's growth is stuck because of two reasons. The first one is personal computing comprises about 50% of their revenue, and personal computing itself is growing slowly, and AMD is stealing market share because of their superior products. So they're posting negative growth in the personal computing sector. The second reason is data centers and AI represent about 30% of their revenue, and because they do not have a product in the discrete GPU sector, their growth is almost flat. So we can see that both personal computing and data center, which represents about 80% of their business, are not growing. So Intel is not growing. So let's look at what Intel is doing about this, right? Because if they can grow their revenue in double digits, their PE will go to about 15 and the stock price will double and go more than $60, right? So Intel CEO is doing the following 3 things to increase their revenue in double digits in the next few years. The first one is they're putting a lot of resources in their personal computing sector to regain their market share and grow significantly because that represents about 50% of their revenue segment, right? The second is they're coming up with a discrete GPU product which can compete with AMD's and Nvidia's products, so they can gain some ground. The third is they're investing about $27 billion in the next couple of years to open a foundry business to manufacture chips within the USA. If they can get successful in this foundry business, it can definitely boost their revenues from 2024 and beyond, but there is a catch. Since Nvidia, AMD, and Apple compete with Intel, they may hesitate to give the production of their chips to Intel because of the IP issues, right? So at the moment, the risk reward is not so clear. I'm assuming that there's a reward of 2x, but the risk is too high. Because if they do not succeed in these 3 aspects, then the stock will stay flat for the next few years, and that's not good. Finally, I want to share my plans. For me personally, I'm not very comfortable investing in Intel at this moment, but I'm going to follow their business in the next few quarters and see how things are moving, right? So I will make a decision to invest in this company if they execute well in the next few quarters.